I recognize that if you're watching this video, you probably think that Tesla's FSD is by far the leading type of fully automated driving system in the world, and that all of the rest are just followers and will never be successful. Or if they are successful, they'll just be also rans as Tesla runs away with the robotaxi business in the future. Of course, I believe that too. But what we want to do today is we want to take a quick look at the maybe the most likely contender, Mobileye, and what's going on with them, and test another Randy Kirk hypothesis, which is how come things like FSD and robotaxi get zero valuation on the stock market while Mobileye gets a really nice valuation. So if you like this kind of content, like, subscribe, notify, because man, they got a lot of good stuff coming up this weekend. You want to take a look, it's down in the information below. You can see all of the different expected episodes that are coming up. And then if you hit subscribe and notify, you'll get notified about all of those. Get reminded, okay? So, and of course, Patreon. Man, I've really hit a wall here. I was getting maybe one new Patreon person per day, and now I haven't had any in like 6 days. If you've got an extra $5 laying around you don't know what to do with, you might want to join Patreon. I put up some of these videos up quite early. There's also spreadsheets and things that go up on Patreon that are not available to the rest of the public, and they're even interactive. All right, let's move on with the content for today. Okay, I'm just going to read some of this and then I'll comment. So on April 27th, 2023, Mobileye reported their first quarter 23 results. Their revenues were $458 million. Now take that, now consider that. Tesla has about, I don't know, 11 divisions that have more than 458 million in sales. I'm not sure, they might already have more than that in Optimus sales. I'm sorry, now I'm being hyperbolic. Okay, their revenues were up 16% year over year. Their net loss widened to 79 million versus 60 million in the first quarter of 22. They reduced their 23 guidance meaningfully. Most importantly, they reduced their revenue expectations by 6.5%. And they said this is primarily because of a weak macro, particularly in their Chinese EV market, but they referred directly to Tesla's price cuts causing a negative impact to their customers' unit sales. We'll talk more about that in a minute, but okay, so they're losing money. They've been in business for quite a while. We'll see here in a minute how they were starting out about the same time that Tesla was starting to develop FSD. So they've been around for a while. They're losing money hand over fist on very low sales, less than roughly $500 million in sales, and they're losing lots and lots of money. All right, so now the guy who writes this, I'm sorry, let's go back up and look at this. This is Fallacy Alarm. Now, I couldn't find anybody's name associated with Fallacy Alarm. I went on the website. There's nothing I could gather to just provide you with a name, but you can go on fallacyalarm.com and you can see their website. He goes on to say, I will contextualize why this company is an important comp for Tesla, what its earnings release means for Tesla, and to what extent its valuation can inform us about the value of Tesla's FSD program. Doesn't that sound like an interesting thing to learn about? I think so. So what do they do? Well, they're an OEM in the automotive industry, and they provide different kinds of automated driving. So that suite, you can have base driver assist. It's just a collision avoidance, et cetera, et cetera. Then you can have a cloud enhanced driver assist. It is able to read signs and lane markings and things like that. Then you can move up to supervision, which is eyes on and hands off. So that's the next step up. And then you have the Mobileye Chauffeur, which is eyes off and hands off. And then finally, Mobileye Drive integrates the self-driving solution into a full mobility as a service. All right, so, it sounds real familiar. Number one and number two account for 99.5% of Mobileye's unit sales. So they're not selling any of these enhanced versions. So why is Mobileye important? Well, they went public in 2014. Sound familiar? That was also the time when Tesla launched their autopilot that was developed in partnership with Mobileye. But then the partnership dissolved over safety concern. They disagreed with the way Tesla marketed and deployed the software. So they went their own way. They eventually got picked up, got purchased. He says that market research, and then they got purchased. They got acquired and then relisted. So they were certainly they led out early on with all this autonomous driving. Of course, they're a LiDAR-based system, LiDAR, I think, plus vision. So then they point out, the writer points out, market research firms consistently rank Mobileye among leaders in this space. Although who knows how meaningful that is. Look at where they place Tesla. Now, I don't know if you can see this, it's not very big, but down here you've got Tesla as being at the very bottom in terms of both execution and strategy. At the bottom on both, absolute bottom. They have all these other ones, May Mobility and Autonomous AZZ and Gatlick and Neuro and WeRide and Badu and Waymo, and all these other ones are all much better in terms of both their strategy and their execution than the Tesla FSD system. Now, I don't think any of these folks that are on this list are making money on their systems. Tesla, of course, is making billions on FSD and their autonomous driving package. So tell me if I'm wrong here. Maybe one of these guys is making money. I don't think so. I don't think any of them are making money. All right, so the Mobileye version of Tesla's FSD beta. Mobileye is running sort of a Chinese version of the FSD beta program in partnership with Ziker. And Ziker is a premium brand under the Geely umbrella. Watch that name, Geely. They're a significant force out there, and they are all in. They are really all in on the future of BEV vehicles, unlike so many other companies that are kind of half in and half out. Its first model, the Ziker 001, was launched in the fourth quarter of 21. Every Ziker comes with the Mobileye Supervision as a standard fit. So just like Tesla putting all the hardware and software in for FSD, but some people never turn it on, that's exactly what's happening with the Ziker. So they had 100,000 of these Zikers are now out there. Here's what shows how the deliveries were moving up nicely. Says here, it's a beautiful car with a design that reminds me of a Porsche Panamera. It probably competes directly with the Model Y in terms of form and software functionality. I can imagine that its success towards the end of 2022 was part of the reason why Tesla's fourth quarter 22 China sales disappointed. I didn't do any research on this. I think that is probably maybe overstated, but maybe someday I'll look that up. Maybe you could tell me. Do you think that was a reason for it? We're beginning to see that a lot of the reason why Tesla had some difficulties in China in the fourth quarter and the first quarter of this year and is continuing to have headwinds is because of the change in some of the rules with regard to the sales of ICE vehicles that will no longer be able to be sold in China as of July 1, unless that's extended. But for the last 4 months, 5 months, 6 months, these manufacturers have recognized that they're running out of time, and they've started discounting them like 50%. And so there's an awful lot of opportunity for people to buy a very nice ICE car at half price. And that certainly is interfering with the BEVs. So this writer goes on to say, sold does not equal deployed. So just like FSD, Ziker receives and pays for supervision in every vehicle, but then the tech doesn't just automatically go to the customer. The tech has to be paid for around $5,000 US. So once they get the vehicle, now they can pay $5,000 and get the use of it. Based on management's commentary in the first quarter 23 earnings call, it appears possible that so far only a very small fraction of Ziker customers have actually chosen to get the package. So we may be looking at thousands of people as opposed to 100,000, maybe even hundreds. Right now, it's a few hundreds of vehicles. So how much does Mobileye actually receive if they sell that $5,000 package? Obviously, Ziker's going to get some of that $5,000, and then Mobileye will get some of the $5,000 up front, and then there's an annual fee as well. this reporter was unable to really figure out what those would be. Don't really know how much they get, maybe around 2,500 they were thinking, and no indication of what they get on future years. So it's really kind of hard to tell. They say we saw an upside on this in 2022 when volumes ended much higher than expectations, and overall Supervision revenue drove 11 points of total company revenue growth of less than 0.5 of the volume. So that's their best guess. So we have no idea how much recurring revenue we can expect each year from the Supervision. So what went wrong in Q1 of 2023, and why are they giving such poor guidance? As you saw on the chart, they achieved an impressive ramp through 2022, but then in 2023, it hit a wall. Tesla's price cuts propelled the Model Y to an all-time high in sales in March, which had adverse effects on Ziker. Tesla is still the product people want. Next time someone tells you Tesla products are outdated, refer them to this. So this slower deployment was hurting them. Overall, levels are still significantly below fourth quarter 22. Before correcting for seasonal adjustments, April was consistent with it repeating their 100,000 run rate in 2023. Mobileye has guided based on 150,000 run rate. It seems that there's no chance that that's going to happen unless they're going to be adding it to other cars as well. So Tesla's valuation crossed red. Having understood Mobileye's business model as best as they can do and its current operating performance, we can now go a step further and transfer that into a valuation exercise for Tesla FSD. I'm going to do that based on a market approach. I will apply multiples of Mobileye's KPIs to Tesla, and I will do that based on the fleet size, the revenue, and the miles of data collected. On the FSD beta fleet, Tesla currently has 400,000 FSD-enabled vehicles on the road. Mobileye has 100,000. Zeeker's, I think that's wrong. Tesla, I think, has 2 million or something FSD-enabled vehicles. They have 400,000 that are actually operating. So 400,000 that people have paid for it either when they bought the car or when they they're paying the $200 a month, and they're actually have downloaded it, and they're actually, we don't know how many of those 400,000 are using it. That would be true. But this is 400,000 actual users on the road, so this is an incorrect statement. With 100,000 Zekers with Supervision, but we know there's only a fraction of those that have been downloaded or purchased. To be conservative from Tesla's perspective, let's ignore for a moment that it's like, he says, let's ignore that only a fraction of those are actually downloaded. So that would be 4 times bigger than Mobileye. Well, right away, that ignoring that is completely wrong. So it makes no sense to me why we ignore that. So I would say that Tesla's FSD program is maybe 40 times larger, not 4 times larger. FSD revenue. Clearly, we can take 2 approaches to the value of an FSD program, a unit sales or a subscription-based. I've applied both to Tesla. Both approaches will eventually yield a consistent result in a saturated market, but they may result in different conclusions during the early stage adoption. I'm going to rely on unit sales approach here because the data availability for Mobileye is better, as we do not have any reliable information on the recurring revenue. Mobileye sold 25,000 Supervision units, about 25,000 Supervision units in first quarter 23, for an ASP of presumably about 2,500 each, which I mentioned earlier, which suggests a 250 million annual run rate. As he's outlined elsewhere, Tesla's FSD program likely had a 1 billion revenue run rate from a unit sales perspective in 2022. So based on that metric, Tesla again is, in this case, 4 times bigger. Miles collected. Mobileye's crowdsourced high-precision mapping system has so far harvested 12 billion miles. For reference, Tesla's Autopilot has engaged 9 billion miles. There's a problem here again. I'm sorry, and I didn't do anything to check on this. Tesla's combined have driven 50 to 60 billion miles. I'm sorry. So that's how we do it. Okay, so 50 to 60 billion compared to 12. So now we're looking at 5 times, he says 4.5 times. Okay. Based on a simple market approach, Tesla's FSD program should be worth at least 4 times, and I'm going to say probably closer to 7 times. Mobile's market cap is currently $30 billion. So this would suggest that Tesla's FSD should be worth at least $125 billion, or $36 a share. Do any of you in this, put it in the comments below, do any of you think that the market is giving Tesla $36 worth of credit for their FSD? Does anybody think that that's true? And I'm saying this is really, really conservative. I'm saying it probably is double this in terms of the value difference. But of course, because FSD is a portion of a conglomerate and one that has struggled not to sell its units, not to make a profit on its units, it's only struggled to get the final full-on FSD executed. And that could happen any day, as we saw with ChatGPT. Now, obviously, not all FSD products are created equal. Not all of them have the same probability of long-term success. There are lots of qualitative reasons why the market cap of Tesla FSD should be different from Mobileye, based on simple KPIs like this. But these reasons go both ways, and they include, I'm assuming these would be the ones he thought were the most important. Since Supervision is not attached to a brand, it may be able to be adopted faster than Tesla FSD. Mobileye has already got agreements with OEMs on new launches, such as the Polestar. So it may be, what he's saying is here, that Tesla may have difficulty selling it to Polestar or selling it to other OEMs, licensing it to other OEMs compared to Supervision. I think that is absolutely incorrect, other than the fact that people won't want to buy it from Tesla. They'll try to avoid buying it from Tesla. But if Tesla's is working and Mobileye's isn't, and depending on what it costs in terms of the hardware and the software, and what the royalties might be paid, and how much money they can make downstream, and whether there's a more cachet with regard to the Tesla than there is to the Mobileye, and whether it looks better on the car, and how it operates, and how the software works, there are so many things wrong with this first comment. I think Tesla will be definitely licensing their FSD if we get to the no steering wheel required level. On the other hand, Tesla's hardware software integration is unrivaled, which may enable functionality to improve at a faster rate. I kind of just said that. Mobileye relies on LiDAR for full autonomy. They call this true redundancy and argue that 2 independent systems are necessary to ensure the vehicle's perception of the environment is accurate. Tesla relies on vision only, voluntarily giving up all the other sensors, although they're seemingly adding back some radar. That may learn down the learning pace, but it also avoids potentially costly reconciliation between opposing information sources. Moreover, adding LiDAR costs money. So it's going to be more expensive at base. It will be more expensive than using a vision-only system. Tesla's FSD revenue in the table above is purely software. The relating hardware costs are accounted for in vehicle sales separately. Mobileye's revenue includes hardware. Therefore, the cap for margins is much lower. Tesla's FSD margins will be approximating 100%. Mobileye will have to share the value creation associated with Supervision with the partner OEMs. If Supervision delivers on its promise, Mobileye will likely capture a lot of the value in the vehicle hardware, both the hardware and the software, but uncertainty remains. How much will they get from this hardware? How much from software? What will the licensing agreements look like? Tesla will keep all the value to themselves and turn around and license to others. And if they deliver on, if either one of them, quite frankly, if robotaxi is the first to be able to get the robotaxis on the road, in significant volume to where it's broadly available across many cities and countries, they will be the winner. And unless Tesla comes out right behind them and can use their brand name and their power to pass them up quickly, then Mobileye will have a win. The more likely thing to have happen here is that Tesla will be the winner in this category, and they will already have a fleet around the world ready to go with the robotaxi. So that would certainly change this entire game, and Mobileye might still be able to get some business from these OEMs in the short term, but in the long term, if they don't come up with a robotaxi version, it would seem to me that everybody would have to turn to Tesla for the software and the hardware, probably, and the hardware. So That is, I thought, a very interesting story. $36 a share, maybe $50 or $60 a share if you believe, like me, that he was way too generous with that one part of the analysis, is what out of $160 right now, out of $160 on the market as of Thursday night when I'm recording this. You think that 35 to 60 or $70 of that total is for FSD. I've got a bridge I would like to sell you. Okay, remember, tonight we've got the regular finance. What we do is on Friday night, we talk about all the good things that happened to Tesla during the week. We also talk about the overall market. We talk about the stock market as well, and all the things that happen, and try to make sense of it all. And we call that Good News Friday. And then on Saturday morning, I'm hoping to be doing an analysis of Cathie Wood on once a month on the day that the employment numbers come in. That'll be on Saturday morning. I will be analyzing Cathie's Friday night analysis of the current financial situation. I think you'll find that one to be fascinating. Sunday morning, all things being equal, I am doing a major interview with a guy who's an expert on solar, as we try to figure out what's happening in the residential solar market. Why is it not just blooming and going crazy? And what is new in solar that we might want to know about, whether it's Tesla or whether it's not related to Tesla. We're going to try to take a super deep dive. So that's just a few of the things. You can look down below in the information in the description below. It'll tell you all the upcoming shows. It'll also give you an opportunity to join Patreon, and then like this if you liked it, and then subscribe, and then hit notify to be reminded of those programs. It's been great talking to you.
Click the link below to get your paperback, Kindle, or audiobook now.